Hey, good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. This is where we marry technical analysis, looking at charts and taking a look at option analysis, give us some transparency on what's happened with the stock and what's anticipated as far as estimated moves going into a future time frame. And we do have some earnings on tap, even though we've had the FOMC. They came out, they raised by a quarter point. We have bonds up, we have commodities up, we have stocks up. The market is moving. So let's jump right in. And the stock that I want to take a look at is going to be Oracle. Now, Oracle is trading up 33 cents at 43.12. They have earnings tonight. Now, what's notable about Oracle is we're going to want to watch the cloud revenue growth coming out from the earnings announcement. But we see that it's trading right off of its best levels today at 43.20. It's well above its 20 and its 50-day moving average at 42.28 and 41.29. This is the area that if there is going to be a test of the bulls, this is going to be the area where it's going to be tested. Right now, taking a look at the Oracle options, clearly stock in a bullish trend. So what are the options telling us going into tonight's event? The easiest way to take a look at what the options marketplace is pricing in for potential move in the underlying, look at, in this case, the front month options. Now, these March options are going to be expiring in 2 days. And what you do is you take the straddle market and the strangle market. For those of you that aren't options traders, it's this simple. Stock's trading at $43. So the at the money strike, 43, is the straddle market. So you take the offer, 81 cents from the calls, 68 cents from the puts. You add those up. Then you take a look at the first strike out of the money calls, trading at 55 cents. Then the first strike out of the money puts, that's the 42.5 puts, 47 cents. You add up the ask price of all of those, roughly around $2.60. That's pricing in the potential of the stock being potentially able to be in a range of $1.30, $1.40 at this juncture. That means that we could see the stock up as high as $44.50 or as low as roughly around 41, let's say 60 is the range right now for this $43 stock. So you're seeing priced in about a 3% range going into tonight's event. Over the next 9 days, which you could basically take the weeklies here and do the same straddle strangle market, they're pricing in the potential range of around $1.64. So you can see that there's a lot of volatility or expectation of potential big moves in this front month. As a matter of fact, implied volatility is trading up right around 51% on these options that are expiring in 2 days. To put that in context, the average implied volatility for an at-the-money option right now that's expiring next week. So the 43s, the implied volatility is running at 28, and you have the implied volatility for the same strike option expiring in 2 days at 57. So it's almost 2 times. So there's an expectation of pretty large moves potentially going into Oracle's earnings announcement, and it's going to be one of the first big, large cap, cloud-based names. We haven't heard from Microsoft. We haven't heard from Salesforce yet. So this should give us a good precursor, an idea of what's coming up in the next month as far as earnings. Another stock that I want to take a look at real quick is going to be Williams-Sonoma. This stock is trading right now down at its best levels today at 42.22. They're announcing tonight up 70 cents. They're doing something interesting. They're challenging. The stock's definitely been in a downtrend as of late over the last couple of weeks, challenging that 20-day moving average, which is resistance at 48.34. And you have the 50-day moving average coming in at 48.89. This is the area that if the bears are going to be tested, because they've been in control, this is going to be that area between 48 and 49. Watch this one very closely. You have basically an estimated move of around $2.69, either up or down, being priced in. So you can see it as high as 51, or as low as roughly around 46 to 45 and some change post earnings. Now, does it mean that it has to move that much? No. But what is notable is that the implied volatility on those front month options, the ones that are expiring in 2 days in March, they're running at around 85%, which is almost 2 times its average implied volatility and also 2 times the implied volatility of the next expiration cycle. To put that in context, folks, that's just telling you that there's an expectation of a potentially violent move. You got a 5% move being priced in right now for Williams-Sonoma. One last market that we want to take a look at, crude oil. Crude oil has been on a tear today, bounced off of its lowest levels that we've seen in months. And you saw that it pivoted off that 47.70 mark. We talked about this morning. It is now trading above at 48.86. The bulls have taken some short-term control, but still well below some key resistance points. Resistance is going to start kicking in on the crude markets at around 50.52. That area right there, up in this area right here, this is where the bears could start to so to speak, pull out their claws against any rally, especially since, yes, we did have a draw in the EIA as well as the API reports as far as crude inventories, but it was comparative to the glut that we still have. We need to continue to see the promising economic data and raising rates and seeing employment. Now we need to see tax reform and all the other components of the Trump agenda start to get into motion, and that really could catalyze certain segments of the market. All right, folks, that's it right now for Tech Talk. We are going to be back at 4:30 Eastern Time. I'm going to be wrapping up all of today's action here at MarketStream.live. See you then.